Hey guys, Tyler again here from Seller Accountant. We've been talking about how cash is king, especially in the e-commerce model. And we spent our first video kind of talking about the cash cycle and AR and AP and how you can really work on those things to free up some cash. Last week we talked about working capital, how important it is to have some liquidity in your business and how you might need to restructure some debt or have an additional investment from yourself or investors to shore up the capital, the working capital in your business. Today, I want to talk about these two items down here at the bottom. Post-advertising gross profit is one of my favorite things to talk about because it's one of the most important metrics of profitability for an e-commerce seller. And I want to talk about how it relates to overhead. So let me scroll down here a little bit. Forgive this kind of smaller version of a P&L here. But what I want to bring your attention to here is right in between my little blue cursor here. This is our gross profit for this particular seller for this small sample size. They got to keep about 35% after their cost of goods sold, their FBA logistics fees, and the commissions that they paid to Amazon. But that's not where you want to stop. You want to go one line further so that you can understand gross profit after advertising. I want to know as a CFO how much cash you had to pump into this brand in order to get that 35 points. Does that make sense? And so post-advertising gross profit makes us go down and take this 10% we spent on advertising here, and let's subtract that. So now we have about 35% in gross profit. Now we're going to go one step further and subtract advertising expenses. That leaves us with 25% in this example. This is a post-advertising gross profit of 25%. Parenthetically, we did a study of about 120 million in Amazon sales for 2019. And that 23 to 24, 25% is pretty much an average number for post-advertising gross. When you look at yours, and when you look at your books, when you try to understand your profitability after ads, if you're not getting at least 25 points, you have a little bit of work to do. Now, there are some product blends where getting 20% is very good. Anything below 20% in post-advertising gross profit as a CFO, I'm not happy with it because it means you don't have a lot of budget down here to invest in anything else. Now, to be honest, in this simplified P&L here that I pulled from a client, this is a client that doesn't spend any money on salaries or rent. And so their overhead expenses, which I'm defining as everything else, anything that is below the gross profit line that is not called advertising, I'm going to consider that overhead. Anything I spend on SaaS products, on consultants, on an outsourced accounting firm like Seller Accountant, anything that isn't directly driving product to a customer is what I'm going to call overhead. And your ability to increase your cash flow in your business, this is where I'm coming back around to our current series, is really simple. If I can increase my PAG, in other words, how much I get to keep of every sale, and or decrease my overhead, how much I'm spending after advertising on other ancillary expenses in my business, to the degree that I can work the relationship between those two numbers where PAG is as far above my overhead number as it could possibly be, that's going to be the degree to which I get to keep profit in my business. And frankly, this is going to sound like an oversimplification, but the way to improve cash flow is to make some freaking money. And so increasing your profit margin after overhead, you got to start with advertising, but then after overhead is that best, easiest way to make sure your business is solid. And I would even take it a step further. If you're considering pumping some money into this business, you have some cash that you have in other investments, and you're looking at, should I put this money in this company that I've created to do e-commerce? I would only say yes if you have enough profit after overhead that you're convinced this is a good investment. If you could turn around and invest in another company or invest in the stock market and get better returns, you'd be foolish to put money into your own business, even though it's yours, unless it's a good investment. And so again, make sure that after advertising, that gross profit is a really strong number. I like the number 25%. And then I want to keep overhead as small as possible. Obviously, the example on the screen here is too small. This is not realistic for most sellers. But that's going to be the determinant of how much my profitability aids my cash flow or harms my cash flow. Take care.